This year, it seems like every headline, every Trump tweet, and every news item, and now it seems like every headline and treat from Donald Trump wants to move the market. Did I say treat?
You said treat.
I can't talk today.
Is it?
He also approved tariffs. Why do I struggle with that word? It's like I just lost my front teeth. Welcome to our April 2018 monthly market and economic update. This is Adam Zuercher with Hixon Zuercher Capital Management. Since we just ended the first quarter of 2018, I thought it'd be good to give you 4 things that you need to know about the markets. There was a lot of action, a lot of noise, but there's really 4 key takeaways from the first quarter. Number 1, volatility has picked up substantially this year, whereas last year it seemed like nothing seemed to affect markets when we never had even a 3% drop in the market for the entire year. And now it seems like every headline and tweet from Donald Trump is moving the market. So from January to March of this year, the market has moved up or down 1% 23 of the trading days. Last year, that never happened even once in the first quarter. One gauge of market volatility is the VIX index. It measures how much fear there is in the market. So let's take a look at the VIX index. Here we have a 20-year chart of the VIX. And you can see it spiked back in 2008 when we were in the middle of recession and everyone was afraid of the economy, the markets, and it kept a lot of investors on the sidelines, or they were selling stocks amidst the downturn. But let's take a look. The VIX peaked back in 2008 at 60. Last year in 2017, the VIX traded as low as 9.5. That is an all-time low. So you can see, if this is a fear gauge of the markets, that last year at 9.5, it's historically low levels of fear, and there was a lot of optimism about the markets last year. Now we see this year that the VIX has actually, today it's right around 20.5. That's a 118% increase from where we were at last year. We haven't seen the VIX spike like this since the summer of 2011. So volatility is back, and people seem to be more concerned about the markets than they were last year. The second thing you need to know about the stock market in the first quarter is that both the Dow and the S&P experienced losses. This is the first time both of these indexes experienced quarterly losses since 2015. Furthermore, we actually experienced our first correction in 2 years. So take a look at this chart. I'm showing you the S&P 500 going back to January 1st of 2017, and you can see for all of January it was pretty much a straight ride up with never more than a 3% dip in the market for the entire year. And then I have this solid line here dividing the years, and you can see that January was a great month for the stock market this year. We got off to a great start, but we peaked January 26th. And it was a quick drop from there. The S&P 500 immediately dropped about 10%. And anytime you drop 10% or more, we call that a correction. This is the first correction we've had in the market for 2 years. Now, you can see that ever since then, markets traded up and down quite a bit throughout February and March. And as we sit today, we are actually right around 7.5% below our all-time high experienced January 26th. The third major item from the first quarter that you need to know is that headlines are driving the markets more than they have in a long time. The first major headline that seemed to drive markets was the tariff tantrum. President Trump enacted tariffs on steel and aluminum imports from a number of countries. He also approved tariffs designed to punish China for stealing our intellectual property. These actions created concerns about a trade war, and markets reacted negatively. Take a look at this chart. As you can see, the market has reacted quite a bit anytime Donald Trump tweets this year. Another item affecting markets this year are headlines out of the tech industry. Last year, technology stocks drove the market, and they were the leading sector in the stock market. By the end of March, however, a lot of unfavorable news was coming out about various tech companies, especially Facebook, that seemed to drive the sector down about 4% for the month. And finally, the fourth thing you need to know about Q1 of 2018 is that the economy still remains strong. We got the latest reading on fourth quarter GDP, and our economy grew 2.9% during the fourth quarter of 2017. This number beat many economists' expectations. In addition to GDP rising, personal incomes are also rising. Companies now have more cash available because of the tax cuts enacted at the end of last year, giving them the opportunity to increase wages. And finally, on March 21st, the Federal Reserve increased interest rates 0.25%. This is a sign that from the Fed's perspective, the economy is still growing and getting stronger. So those are the four main items you need to know about the first quarter. But the most exciting event of the first quarter for me was that the bull market had its 9th birthday on March 9th, 2018. The stock market, after falling over 50% during the Great Recession of 2008-2009, actually hit bottom on March 9th, 2009. It's a day I'll never forget, but it's a day that I'm glad is behind us. So with all of the volatility that we had this first quarter, I want to put that in perspective. And I want to look at a 10-year chart of the S&P 500. And you can see here I'm showing you the increase from March 9th, 2009 to where we are today. And we're actually up 289% from that low in 2009. So we've had substantial gains over the last 9 years. And this quarter's drop is really nothing when you put it in perspective as a long-term investor. So don't let this increase in volatility negatively impact your investment strategy. And always remember that volatility is normal. What we're seeing this year is actually typical for a normal year. Last year was not normal. Remember to stay focused on why you are investing in the first place. Every investment plan should be attached to a goal. Remember that as a long-term investor, if you're going to invest in the stock market, there is some additional risk. And in order to get the above average returns in the stock market, you have to be willing to go through periods like we just experienced. Stay focused on the fundamentals. The fundamentals are telling us that the economy is strong, the underlying stocks in the stock market are profitable. These companies are making money and growing earnings. So the headlines that we see affecting markets the first quarter should not affect your strategy at the end of the day. Please remember that nothing we talk about here is a recommendation. If you have any questions about your specific portfolio or any questions about how these events do impact you and your retirement plan, please give us a call at 419-425-2400. We would love to sit down with you, get to know you, understand what you're investing for, and give you a second opinion on your portfolio. To stay in tune with any updates from our firm, please go to our blog at hzcapital.com, enter your email address, and we'll send you an update every Monday with the events of the market for the prior week. Well, that's it for this month's market update. I'm Adam Zuercher with Hixon Zuercher Capital Management, and I hope you have a great spring.